The Bank of Japan unleashed its massive stimulus program just over a month ago now. And joining us from Tokyo with his analysis of how Abenomics is doing, that's the economic policies of Japan's Prime Minister Shinzo Abe, is Ed Rogers. He's the CEO and Chief Investment Officer of Rogers Investment Advisors. And thanks so much for joining us. Let's get straight into it. We have breaking news that Japan's Nikkei average has just broken above the 14,000 level for the first time since June 2008. What's your take on this?
Well, good morning, Michelle. Thanks very much for having me on the show. My first response is hooray. We've been predicting this for well over a year now that a rally was coming. And when we broke 12,000, when we broke 13,000, we were telling investors this is really just the first step in the recovery process. We see the Nikkei going much, much higher over the next 2 years. And overall, of course, we think this is a good thing for Japan and a good thing for the rest of the world to have a far healthier Japanese economy and a far healthier Japanese stock market.
The first step in the recovery process, so you think these stimulus efforts and Abenomics in general is starting to take effect?
Absolutely, absolutely. And we're seeing again, the three arrows were: one, print more money; two, spend more money; three, structural change. Print more money, spend more money clearly have taken place. That's led the move of the yen from 75 up to, as you say, we're verging on 100. We're starting to see the structural changes take place. That's a long discussion, but I can shorten it by saying that Japanese companies have had to work very, very hard to simply stay alive over much of the last 5 years. They're at a point now where the operating leverage is fantastic. Any uptick in business leads to better profits, and sort of as your show began, that leads to more and more Japanese consumers feeling comfortable taking vacations. Also, Japan has become a more livable place. The memories of the tsunami and the disaster are fading, and we're seeing more tourists coming back. We're seeing other stimulus to the economy that's very, very positive. And Japan has always been a fantastic tourist destination. At 100 yen to the dollar, it's certainly a far more appealing one than it was at 75 yen to the dollar.
Well, we mentioned consumer spending, and we're talking about the stimulus. Now, the idea here is that with more money in the system and at a cheaper rate, more people will have cash to spend, and that will drive up consumer demand and eventually consumer prices. Now, skeptics say that all this extra cash is likely to sit with the banks and not flow into the real economy. But we seem to be seeing some signs that the money is flowing into the economy. What do you think?
I'm on the side that it's going to work, but it's going to work over time. So expecting that next month we achieve 2% inflation's just not going to happen. What I can tell you is our office is across the street from Tokyo Tower. It's a major tourist destination in Japan for Japanese people and also for foreigners who come to Japan. It's one of the major Tokyo destination points. 2 years ago, it was empty. In March, April, May, these traditionally strong tourist months. I can tell you now, it's absolutely packed with people. There are lines outside the door. I mean, that's just one little anecdote. But I can also talk about just driving in Tokyo.
Ed, you mentioned tourists a lot, but what about Japan's domestic economy? Japan's household spending surged in March at the fastest pace in 9 years, up 5.2%. So what does this tell us? Yes, this was before the stimulus package, but perhaps on hopes of the stimulus package.
Sure, there's been a definite change in attitude, if you will, on the part of Japanese consumers. It's a much more positive place. People have a lot more confidence that the Abe government means what it says when it's going to achieve 2% inflation. And everybody in Japan is realistic. We know that's not an easy task to accomplish, but there's a lot of faith that the Bank of Japan, led by Kuroda, a new regime, a new leadership, is very committed to again, doubling the monetary base. That's an enormous move at the societal level. If we want to achieve inflation, doubling the monetary base is going to help doing that.
Ed, I want to talk very quickly about the yen. It has plummeted recently. This is the desired effect. Any chance that this could spark a currency war?
I really don't think so. I think we're seeing the yen move back to, frankly, where it was 4 or 5 years ago. Actually, 6 years ago, we were at about 120. So there's still a lot of room between, I think, 100 and 110, where while foreign politicians might have a talking point moment where they fuss about it a little bit. The reality is most of the G20 will benefit from a resurgent Japanese economy. And we all know that if we can keep the yen somewhere between 100, 110, 100, 115, things are going to continue to get marginally better. And we're going to have Japan really functioning on a much, much higher level than it has over the last 5 years. And that's very beneficial for the rest of the world.
Ed, we're out of time. We're going to have to leave it there, but thank you so much for joining us live from Tokyo. Ed Rogers, CEO and Chief Investment Officer at Rogers Investments Advisors.